Hello, everyone. Welcome to the panel on mobile payment as the catalyst to scaling up this cashless society. My name is Nina Xiang. I'm the founder of China Money Network. I'm very happy to be joined by two industry participants and very good payment firms, FOMO Pay and QF Pay, as two panelists to discuss a list of questions about mobile payment and also cashless society and many issues involving these two topics. So we have Louis Liu, founder and CEO of FOMO Pay, and Tim Lee, founder and CEO of QF Pay. You can find out more information about both of them online. So we're not going to go into a self-introduction session, but we'll jump right into the topics about payment, mobile payment, and cashless society. So firstly, I'd like to ask the two panelists to briefly maybe explain what are the similarities and differences in the mobile payment market between China and ASEAN markets, because you both operate in these regions. So maybe Louis, you can start.
Sure. Hi, everyone. This is Louis, founder and CEO of FOMO Pay. FOMO is a Singapore licensed payment and payment company, which was established back in 2015. So back to, we have been providing the one-stop digital payment solutions to the merchants in Singapore and in Southeast Asia. So regarding to Nina's question, what is the difference between China and Singapore, let's say, I would say, first of all, China is definitely the leading countries in the world to drive the cashless payment. And there are so many new technologies and different kind of use cases that has been advancing compared to the other countries like Singapore. We have been learning from different kind of business model and technology from what's happening in China, including the recent CBDC, which is happening in Shenzhen. But back to the main question, I would say the main difference there will be two. Number one, in terms of market, in China, there are some big techs and or super apps like WeChat Pay, like Alipay, who have started with tons of the users before they get into the payment world, so they can quickly flood the market and to have a great user base, so that it's easier to promote the other value service after the payment rail is established. But in terms of Southeast Asia, where I'm from, most of the countries, the banks are still the established financial force in the industry, and there's no big super apps here. That's why most of the e-wallets and mobile payment will start from the scratch to acquire the users and acquire the merchant. That's why it won't be as fast as what happened in China from the market perspective. That's number one. Number two is more from the regulation perspective. In China, at the very beginning, it has a relatively loose policy environment to encourage the fintech innovations like e-wallets to quickly grow and dominate the market. But in Southeast Asia, especially, the banking industry and financial industry are highly regulated, and it leaves a very limited space for fintech players or startups at the very beginning. If they want to get into this space, they have to get a license first before they are able to run any kind of fintech innovations. That's why a lot of the banks right now, until today, they are still not empowering the new fintech startup in the market, which is different from what happened in China, whereas the banks are able to support the e-wallet so that the users can easily top up the money from the bank account to the e-wallet account. But if this has not happened in Singapore at this moment, people can only top up using the credit card, which increases the transaction fee. So these two areas are the difference we see between Singapore and China.
That's very interesting. Thank you. Tim, what do you see?
First of all, we are the one that overview the whole process of China from mobile payment from 0 to 1. We introduced the first ever mobile post machine. We connect with the mobile phone in 2001 with the boot. At that time, actually 95% of China merchants only accept cash. But right now, I think it should be like 99% or at very extreme, maybe 99.9% of all the merchants, even those mom and pop shops, even those only just some of the truck store on the roadside, they all accept mobile payment by using QR code. So it's I would say it's a miracle in China. All the wallet player like the WeChat, Alipay, and even the Chinese government, they didn't foresee the fast growth within just like maybe 5 or 6 years. So right now the China mobile payment landscape is advancing into more detail, more about the solution. They have like first of all they have a facial payment ID. You can just pay by face, and then there's a lot of like new account application. You can it's a little bit like Amazon Go. You go in and grab the food and you can go out. There's no one can no one need to be in the store. And also, there's a digital currency coming out right now. They just started the first public pilot launch in Shenzhen. I think it's starting from this month. So it's be used in the mobile payment. In We also operate in over 16 market over Asia Pacific. And then we have now aggregated over 160 mobile payment options all over the world, including most of the Asia Pacific major wallets. And then we found out that the difference is this. Most of the Asian countries, they learn and look about the Chinese experience. So they make a lot of difference. So the China market is that they move the market first by payers, and then the government reacts, the bank reacts, all the central bank, all the things react, and the regulation come out, and then it improves. But you can see in Thailand, in Singapore, in Indonesia, Cambodia, the central bank work really fast. They can see from the today of China that what will happen to their country. So they make I think two objectives. First of all, there's a lot of countries claiming they want to be cashless in this year or next year, from cash to cashless. That's the country goal. Instead of this just move by market, and they come out a lot of different kinds of regulation and payment license, just like PSA in Singapore, and then they have their national QR. So Thailand, Singapore, Indonesia, all have their national QR. So all the QR code need to be following into one standard. But in China, actually, this one is not in one standard. And then finally, the government come out and there's a net union need to connect all the QR code again. So this is very different. And also, I think in China, there's some of the giants like telecom, like bank, they are quite missed out in this wallet game. And then I see that in the Asian markets right now, there's a lot of different wallets. Each countries or each market, I can see. I know they just like in Singapore, there's over like 20 something wallets. I think it's the market is very different. The Asian markets, they are all having their national QR, like the Thailand, the Singapore, Indonesia. So the government is in control even in the beginning of the game. And then also about the payers, the wallet payers are very different. In China, there's a lot of giants, but they miss out the wallet game. Even the search engine giants like Baidu, another e-commerce giant, Jingdong, and then a lot of bank and the other like conglomerates. They have the potential to become one of the wallet major payer, but they miss out the game because they didn't see the potential at that time. But I think that in the Asian countries and markets, we see a very different story. All the telecoms, all the bank, and all the conglomerates and other different players are now participating. So in just like in Singapore, there's over 20 something wallets, and in Thailand there may be 10 wallets, in Indonesia there may be like 5 to 7, and then all of them are greatly participating in the game, and they don't let go of each other. So I see there's a variety in the choice of the wallets, and then they provide different functionalities and different benefit to the consumers. So and here that's why this come the needs about our service about aggregation. So how we aggregate all these payment service together, and then we provide a one-stop solution for the merchants.
Those are very interesting too, Tim. So you touched on it about how China being a very large scale single market versus ASEAN, multiple many different countries with different regulatory schemes and different consumer user habits and all those different elements. But let's just take the example of QR code. You mentioned about how there is a lack of standardized QR code across ASEAN. So in practice, how do you manage that challenge, Tim?
So what we do is like this. Actually, there's a very difference about different wallets in each country. Even the same country, all the wallets are different phase. For example, some of them maybe only can do offline. They don't even have the online or jump in at purchase. So it's all mature functionality you can find in the Chinese wallets. So in the Chinese wallets, let me describe. No matter it's online or offline, no matter it's just a single store or chain store, no matter it's an in-app or a mini program or HTML, you can find the wallet will be able to be paid in all these scenarios. So it's very mature. But in the Asian market, we found that all the wallets are in different stage. So what we do is like this. We connect all the wallet together first into the QFA system. And then we make sure that what they can do right now, for example, if they can do mostly offline, we help to bring them to other countries which regulations are okay. So it's all about two different territory. The one original from the wallet and the one that received the wallet. So just like we bring the Chinese wallet over the Asian, and then we bring the Thai wallet to Singapore, and then we bring another Korea alliance and the other wallet to Hong Kong. We bring all these wallet to different regions and different markets, and we let merchants accept them. And right now we are moving more to online due to COVID as well. We just have a strategic partnership with Shopify. We are one of the Shopify strategic partner. So if you are using KFPay in Shopify doing e-commerce, you can now accept a lot of wallets and payment options all over the world. I think in the future, I would say that the mobile payment is going faster and faster in Asian. And then the main theme, especially this year after COVID, will be online and e-commerce.
Mm-hmm. Luis, what about in your operation, especially in the past year, 2020 with the pandemic, what type of unique challenges you have run into and how did you deal with them?
Actually, before I come to this question, Nina, I would like to add on to your previous question about the interoperability, what's happening now in Southeast Asia. So former, we are from Singapore. Singapore is the first country in the world to develop and launch the national QR by the government and central bank back in 2018. So the background is when our PM, Prime Minister Lee Hsien Loong, went to visit China and India back in 2017 and have seen how the cashless payment and the QR payment has been driving the innovations and bring the convenience to the mass market, how it could promote the financial inclusion in those countries. So he come back and back in 2017, during the National Day rally, he said, I would like to build Singapore as a cashless society. That's how everything started. Formal is the founding member sitting on the National Payment Committee, SGQR Task Force. We spent 1 year to work with a few other key players, including the 3 local banks and 3 international schemes, to develop the first national QR standard called SGQR and launch in 2018. Then after Singapore, the other countries in ASEAN start to learn and follow, including Thailand, Indonesia, Malaysia. All these government and central banks see the convenience and the advantage, so they start to roll out their national QR. So in Singapore, it's called the SGQR. Malaysia just recently launched their national QR called the Do It Now QR. Do it, D-U-I-T, in Malay word means money. In Thailand, it's called the Promptly QR, launched by the ITMX. And in Hong Kong, we also have the similar one, which is called FPS. All right. So you can see more and more central banks in the region, they start by launching their national QR to solve the problem which Tim mentioned just now. There are many wallet players in these countries, which is a little bit confusing both the consumer and the merchant. So when you went to a merchant before there's a national QR, you can see there are many QR stickers, there are many acceptance marks. So the consumers is a bit confused which one should they use, and the merchant has always got problem about which wallet to accept. That's why they will come to company like Pay, they will come to company like QFPay for the aggregation solution. But the government want to take initiative to solve this issue, not only leveraging on the industry force, right? So government comes out and say, no, I'm going to launch a national QR, and all the e-wallets there, you must be in compliance and to be able to interoperate with each other. Okay, that's what happened. Starting from Singapore, Malaysia, Thailand, Hong Kong, and now many other countries are catching up. That's number one.
Mm-hmm.
But after this, what we have seen is the government is right now, especially in ASEAN, okay, is talking about the interoperability between the countries on behalf of central banks or on behalf of the national clearing house. For example, Singapore and Thailand has interoperated their QR schemes, which means the Thai people are able to come to Singapore and use their bank app to scan the Singapore national QR and make payment. Whereas Singaporean went to go to Thailand right now, they are able to scan the Thai QR and make the payment. And both countries' clearing system will do
Mm-hmm.
the money clearing for the cross-border payment.
Mm-hmm.
Okay, so that brings an interesting point. One, there are industry partners like Alibaba, like QFPay, who are driving the interoperability, which is doing a fantastic work to bring the one national QR to another country for the acceptance. On the other side, we see the government in this region who are working on the interoperability, and FOMO is sitting in the Singapore National Payment Committee, so as you cut us off, to work on this. We see more opportunities to interoperate between the countries so that you are able to benefit those underbanked people or populations in this ASEAN region. So we focus on Singapore, we focus on ASEAN. So that's what we see for the interoperability to share. Yeah. So back to
I think we're running out of time, but I
Right.
really want to get the final question, get your inputs on. What do you see about the big technology companies in China, as you pointed out before, Tencent and Alibaba being the two of the largest mobile payment with the highest market share in China, and also ASEAN countries leaning heavily on China's experience. How do you see the interplay between BAT, the big tech, with different government regulatory bodies across ASEAN, and also companies, industry players like yourself? Tim, maybe we only have perhaps each 1 minute left.
Okay. First of all, I think in China, those big giant players is working closely with the government to bring first of all the whole mobile payment infrastructure. They are now heavily regulated by the central bank in China as well, and also they're working with a lot with new innovation, including smart cities. The whole using the whole all the 5G, and this is what we call the new infrastructure in China. And when they go overseas, I think they are very cautious about how to interact with the market and all the government regulators. First of all, I think there are a few different angles. First of all, they do first directly touch about the commerce by enabling the acceptance in over the Asian countries. So we are one of the major strategic partner of WeChat Pay, Alipay, and China UnionPay. We help them to be able to accept in multiple countries over the Asian markets, and also actually they are launching some of them like smart service, like the restaurant smart restaurant service. There's a Keyun, there's a wholly owned company. They're launching in Singapore. They're launching in Thailand. We help them to provide all the payment service as well. And secondly, they do a lot of strategic cooperation and investment over the region. So they invest in wallets like TNG in Malaysia. They invest in Grab. They invest in Gojek. And then they have a strategic cooperation with you can see the JD and Central Group. So there's a lot of like strategic partnership and cooperation. And I think instead of they just stepping as a frontier in China, they are right now more behind the scene in the Asian market. But we can see a lot of the influence like Lazada, like Shopee. You can see that they are helping them in terms of technology and how to operate it. So I think right now it's like this. The Chinese giants is helping the push of the mobile payment and the whole what I call smart life or smart cities
Mm-hmm.
ecosystem in Asia. And then
Mm-hmm.
the mobile payment itself is one of the key infrastructure which we are
Mm-hmm.
we are very happy to be part of it.
Mm-hmm. Thank you. Luis, we're already out of time, so maybe very quickly for you to share your thoughts.
Sure. I would say there will be two parts, the main difference for the big tech companies about the upcoming challenge. The number one is compliance and regulations. Now, China start early, right? The big tech companies, the innovation start early over there, doing fantastic works. But right now, the regulators is imposing more and more guidelines and the rules to make sure that the players are in compliance with the national, the rules and guidelines, and to enhance the KYC and AML policies and all this. So they are facing more and more this kind of compliance and regulation pressures, what we are observing in China. But Southeast Asia, we start early, but all the rules are set up first so that they lay out what's the ground that fintech company can work on, and then they allow you to grow after you get the license. So license is number one. You must be licensed and be compliant before you really start to roll out your solutions in Southeast Asia. So that's what number one main difference. But it share the same trend that the regulators are all imposing more strict controls on the financial industries, regardless of your big tech background or your banking background. That's number one. Number two, what we see right now is the bundle strategy is going to be the main trend in this industry. If you are just doing the payment, regardless in China or ASEAN, is not enough right now. The merchant need more, the customer need more, especially during the COVID. They don't just want the payment solutions, they want the financing solutions, they want marketing solutions, they want insurance solutions, or even how you help the merchants to grow their business to even IPO. That's why digital bank is becoming a new trend, both in Singapore and in ASEAN countries. So AMTD Group, where FOMO is a part of right now, is a FOMOPay is subsidiary of AMTD. Right now, enter the entire group. There are already two digital bank licenses, one in China, one in Hong Kong, and right now the entire group is applying for the third digital bank license in Singapore, so that we are able to provide a full set of value-added service to the merchant, not only payment. It's just not one part of it, but also the financing solutions, but also insurance solutions as a one package to bundle together to provide to the merchant and to help them to grow their business or to scale up the business to enter into foreign and international market during the COVID, especially right now. That's what we see. The digital bank is coming to many countries, and this digital bank will be able to empower a bundle strategy to provide a suite of products to help the merchant, including payment. That's what we see. So all in all, it will be license regulations. That's number one. And second, is digital bank is coming to be the new normal after the COVID in many countries to service the merchant, especially the SME who are suffering during this COVID-19.
Wonderful. Thank you to both Tim and Luis. Thank you for your wonderful insights, and thank you for coming to this panel. Until next time.
Yeah, thank you.
Thank you.